There are some very typical methods of doing the valuation. The first of that is land and building. Separately the land, separately the building. The second method is the depreciation method. Yet another method is called the market value method. You then have a rent capitalization method. And lastly, the replacement cost method also. Now, in order to complete the valuation, there are certain data points that you need to capture. Examples of this is property characteristics. Is it in a location which is easy to access? What is the neighborhood like? And what are the environmental considerations for this particular project? Is it near a pollution infected nala? Is it close to a school or a railway station or the main road? What is the neighborhood like? You might build a very fancy project, but if there's a lot of slums in the area, then the price starts depreciating. And then of course the property characteristics come into play, which is whether it has amenities, whether it is a greenhouse. That's the other new thing that's happening nowadays. So these are the kind of data points you need to capture, and that is why some of these are subjective in nature, and therefore valuation is not a science only. It is significantly an art also. Now, where will you get some of these data sources? That is important also. We're talking about characteristics, we're talking about characteristics like neighborhood, environmental, access, property characteristics, approvals, etc. The Stamp Authority will give you some idea, because the Stamp Authority has a historical database of the properties that have been financed in that area. Lenders, you yourself as a lender might have financed projects in that area. You therefore have a benchmark rate for that area. Of course, you will have to specifically fine-tune it depending upon the characteristics we talked about. You will speak to stakeholders, respondents like residents in the area, builders, brokers and agents, any stakeholder who is involved in this particular activity of constructing, buying, selling property. That is another data source which becomes extremely important in your final valuation methodology. Let me give you 3 quick tips on the valuation game. If you have a mezzanine floor in your project and you need to value it, typically it should be in the range of 70% of the cost of a normal floor on that particular project. If it's a covered area car park, then the valuation should be 25% of the normal rate for that particular location. And if you have a terrace, then, and if you have access to that terrace privately, then it is 40% of the value of the property on that particular floor. Let's take another basic question. Why do you do valuation at all? So, here are some reasons why valuation is ever done on a property. One, because it is useful for the authorities to charge tax and therefore for tax assessment. The other is for you as a buyer to insure the property. At what value do you insure the property? Of course, then for buying and selling. If I'm buying a property and you're selling a property, we need to know what is the market value or the transactional value that we should enter into. The other one can be for leasing properties. What is the rental rate in that area? How do you find that out? By doing a valuation. When you take a loan as a lender, you will want to know the value of the property. And therefore, for taking mortgages for loans, you need to do a valuation. Property partitioning is another reason why you do valuation. Supposing there is a large property, land, a building, a bungalow, and it is now being partitioned within the family. If it is being partitioned and you want to decide the partitioning ratio based on a value, you need an independent valuation done. Then if you are buying such a property, you also are acquiring that property, it's a land again, you need a valuation. And then of course, when you apply for a visa to go abroad to study, often the US Embassy or any other embassy will require a valuation on the property owned by your family from an independent valuer. And therefore, to avail a visa to go abroad to study, where you need to show certain assets in India. Now, these are the broad reasons why you typically do valuations. As a lender, let's focus only on the one that matters most to you, which is what is the value of the property that you are financing? Are you meeting the regulatory requirements of X% for loan to cost ratio? As a borrower, is the valuation of a property valid in terms of the amount of loan that you are seeking? And are you getting the maximum loan if you have the servicing capacity based on a fair and independent valuation of the property? So let me do two conclusions here. On the technical section, I think we've covered as much as we could in this kind of a module, where we have explained and introduced you to various components, various reasons, various purposes of doing valuation, various methods of doing valuation. And you as an engineer who is now potentially going to work for a lending company or are working for a mortgage finance company obviously know each of these phrases and more during your entire education process. This module on policies of credit, policies of legal and policies of technical, combined with the processes module and combined with the products manual, form the basic foundation of every lending institution in the mortgage business. Thank you.